Hello, YouTube. The stock market has been pumping, 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 and it looks like it's a rocket ship that just won't stop. But now we're going to face our final boss, or Jerome Powell, tomorrow. Is he going to say, whoa, whoa, whoa? Or is he going to blink, right? That's the big question for me. He's been telling us recently that he's pushing back on rate cut bets, but the market pushed back even harder. And here's the interesting part. We have some economic data today that came out, same thing as yesterday, and it's an auction on the 10-year note. We can note that it's actually lower than it was on the previous reading, right? That's about a month ago. Then we look here to today, and we got a 30-year auction. This is ironically what broke the market, where the market was like, whoa, 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 that's enough. And this time it's down by 0.4. So that's pretty good. Here's the headline from Bloomberg. Housing costs gains offset decline in energy prices. Core CPI ticks higher in signs of bumpy inflation path. Fed swaps price in slightly higher odds of 2024 rate cut. And that's important because the CPI data actually came out before we had that auction. So as we're thinking about everything we're looking at right now, this is really interesting because tomorrow at 2 o'clock, we get the FOMC rate decision, we get the statement, and then we get Jerome coming out at 2:30. So we've been looking at the charts a lot, and now I really want to think about what is going to drive the market even higher from here, or what could go bad. We've talked about this. The first thing I want to focus on is that we have this pattern here on the weekly, which shows us that we have hollow candles that continue to go higher and higher and higher over the candle high every single week. And we have how many weeks in a row? 1, 2, 3, 4, 5, 6, 7 in a row. We've been using Bitcoin as our template, and I want you to pay very close attention here because there's something that this has done that we might get. I've been talking about maybe getting some volatility on Jerome, and we'll talk about that right now. But just before we do, I'm going to ask you for a huge favor. Could you please consider smashing that thumbs up and subscribing to the channel? And I'll thank you very much ahead of time because you guys are just such a great support, and I'm really grateful. All right, so Bitcoin went for 8 weeks in a row, and now we have an inside bar or consolidation, and we held the low. What's really interesting as well is that this actually happened a day or two ahead of the FOMC. Just like it went up before the stock market, it went down before the stock market. So tomorrow we'll talk about what the Fed said. That's what we do on every single Fed day. But if we look here to our pattern, what would we need to do this week to invalidate it? Well, we would have to go from 464 all the way down to 455, basically. We would have to drop by, it's quite a bit here, from 464 back down to a weekly higher low. That would turn into a 2% decline, which means we currently have a 2% cushion. If the market drops tomorrow by 2%, hey, we're going to be on strong support. Are you going to be selling it or are you going to be buying it? That's the big question. So let's think about that. After we get through the rest of the data, we'll come back and look at a few more charts because I think it's really important that we have roughly a 1% cushion to get back down to 460 and roughly a 2% cushion to get back down to a weekly higher low. A 2% move on a Fed day is considered a big day, which means if we get a big red day tomorrow, we should at least get a dead cat bounce off support or that weekly higher low. So Jerome's losing control of the narrative. That's really what it comes down to, right? What do those green eyes think? Green eyes, blue eyes? I don't know, right? Behind blue eyes. Anyways, he's been pushing back for a while, but the market pushed back even harder. And not just the stock market, it's most markets. The bond market kind of said, hey, we don't think you're going to be doing as much as you think you will. And like I mentioned, this is important because we got a 30-year auction. This is what really caused a lot of volatility in the market the last time we had one. And this auction came out after CPI. So if they thought this was bad, as we're kind of seeing here with it, telling us that, right, core PCI ticks higher and bumpy inflation path, whatever, just buy. That's what we're hearing here. And if we look forward to the rest of the week, we have a rate decision out of the BOE and then also out of the ECB. And this week, did retail finally get it right? Or is what I laid out about to happen, where we're going to get a slam right back down to support and we're going to be looking to sell on that? So out of this poll, this is unusually bullish. Anything over 55% for one team is unusually bullish. 60% is getting a little bit extreme. So people are extremely bullish and they've been getting rewarded for it. But what are we failing to see that I've mentioned that I want? Failing to make a higher high here. So we got 67. Then we hit 68 yesterday. 60. Oh, we finally got 68. Let me just double check here. I'm pretty sure we were at 68 yesterday. I want to see us over 70. Yesterday it says 68. Today it says 68. Hey, we're stalling out, but the market's up by 0.5% today. And the Nasdaq's up by almost 1%. It's up by 1.6% on the week. So the fact that we're not seeing this fear and greed tick up is just giving me a little bit of apprehension. Yesterday, we talked about how we were seeing the trillion-dollar companies down. Hey, well, they're snapping back. AVGO even up more. NVIDIA up. AMD up. Apple, Microsoft, Meta up. Oracle sad, right? That's a sad stonk. If we go back a week, hey, there's Mr. Green. There's our green team looking pretty good. The only people getting hurt right now are short sellers where, man, they went net long for like a minuscule amount of time, 2 weeks, and they're like, yeah, screw it, back to short, back to losing money, right? That's the system we know. That's the system we love. We love to lose. All right. So what I want to do now is actually just go through a quick little preview, because what's going to happen tomorrow is we're going to get an FOMC dot plot. If you're not sure what that is, it means we're going to get a whole bunch of dots, and that's what the market tries to decide is important. We got the last one in September. Now we're going to get one here in December. Powell's been pushing back, but the market pushed back harder. And now what we're going to do is look here and tell us that if they throw us a curveball, what would that be? I'm going to save you all the details because I actually read it. And we're going to jump down here to the lower part. We're going to jump down here to the Fed's long-term neutral rate. So with investors focused on when rate cuts will start and how fast they'll go, the Fed meeting menu appears to be loaded with desserts. The main question seems to be how many slices of cake the Fed will serve. But don't be shocked if a serving of vegetables also winds up on your plate. The surprise would be if the Fed, in sitting at the stage of rate cuts, begins to rein in expectations for how low they will eventually go. Since mid-2019, the Fed projection for the long-term neutral rate has been about 4%. The neutral federal funds rate is one that is neither contributing to faster growth nor restricting growth. It is essentially where the Fed thinks its policy rate will eventually land. Moving this higher or lower literally will be moving the goalposts in a way that the S&P might not love. And that might be the intent. Why? Because he's been pushing back, but the market's pushing back harder. He's losing control. This might be his way to do it. I'm not sure he will, but I'm watching. The September batch of projections showed that 7 out of 18 Fed policymakers now think the long-term neutral rate is above 2.5, up from 4 in March. It would only take 2 more to shift the median higher in Wednesday's updated projections. That's going to be tomorrow. 2 more people shift. We're going to be looking for it. And then we note here that in September, 5 Fed officials, blah, blah, blah. In October, a dove, Fed President Daly, said that the long-term neutral rate may be higher than 2.5, possibly as high as 3. Uh-oh. And that would cause some ripples on the 10-year note, which we're going to look at in a moment here. We're just going to skip the rest because just for time. All right, so make this really simple for me, Justin. All right, let's go through. Let's make it really simple. S&P is bullish if it remains over 461. 461, 462 specifically. For QQQ, we're looking for 393. Right now, we're currently at 398. We got about a 0.5% cushion. If we fall back with all those areas, watch for the potential to do what Bitcoin did, where it slams down to the weekly higher low. And then if we hold, hey, that's support. It's where we expect to find buyers. If we don't hold, well, it's not support. Dead cat bounce, then we're probably going to go lower. On the same side, we see the dollar down, but on support. It would be ready to launch off if it starts to go. VIX, man, it's crashing. It's at 12. No one seems worried about anything. And the 10-year note, this is the other one I want to pay particular attention to. So I want to pay attention to SPY, QQQ, but also US 10Y, the US 10-year note. And specifically, I'm watching 4.336. Why? That's our previous 52-week high, which is actually where we formed our bear market bottom after we actually pushed off. After this line started going down, we snapped the bear market of 2022. So if we reclaim that now, that's not good. I don't want to see us back above it. So with that said, I wish you guys all the best of luck tomorrow. I'm going to leave the video queued up here on the left-hand side from the weekend, and you can subscribe on the right-hand side. I will be live through the stock market open tomorrow. Otherwise, thank you for tuning in. I look forward to seeing you tomorrow.